So, hi everybody, this is Hustle Hub. I'm Giacomo and today we're covering Intel. This is one of the stocks that you asked me to do. So, before we get into it, make sure to like, subscribe, and comment for the stocks you want me to analyze. I'll answer all your comments, so make sure to use it and drop me the tickers that you want me to analyze. So if you're interested in the databases that I use for this analysis, the link will be in the description, so make sure to check them out. Let's get into it. So Intel is a technology company that works especially in the chip making business. It is a very large manufacturer and it operates all around the world. We can see, first of all, what Wall Street thinks of Intel right now. So 49% of analysts recommend a hold, 24% recommend a sell, and 26% recommend a buy. So let's see some of the latest reports that came out. So we can see these ones like JP Morgan, Piper Sandler, and maybe we can see a little bit more. Let's see some of the latest ones on the chart. So here's JP Morgan. Let's see the evolution during this year for the price target on Intel Corporation. We can see that in October 2020 they were pretty positive, and then they started to go down. Now we see that it's underweight at $32, the price target, and it hasn't been met. And the price target hasn't been met yet. Let's see a few others. Out of the latest ones, we can see, for example, Citibank, Barclays, Morgan Stanley. So here's Morgan Stanley, here's Citibank. Let's see what they have to say. So this one is Citibank. You can see that how they have evolved. Let's see for this year. So they were neutral at $52 last October. They capped that in January 2022, and then they had a change to neutral at $58. Let's see their reasoning behind it back then. So CD lowered the firm price target. The company reported a strong Q4 due to strengths in PC and servers, but gave very poor guidance due to heavy investing, a 14-week quarter, and an inventory correction in the PCs. Danley tells investors in a research note he lowered estimates for Intel post the results. Alright. Then you see how they have evolved during the year. You see this neutral also during this year. So we see Citi Analyst reiterated a neutral rating of $55, but noted that March notebook shipments were up only 33%, below Citi's expectations of 42%. The analyst stated overall first quarter 2022 notebook shipment were down 20%, below expectation, and so on. And then they have changed again during the year. They have gone to a price target of $45. Let's see what they had to say back then. Citi Analyst lowered the price target expects the downside to spread to other sectors such as automotive and last for a few quarters given the slowing economy and buildup of inventory. As a result, he lowered estimates and moved analog devices to his top pick given its defensive nature. Alright, and then we see what they had to say. In November, they went neutral at $27. And then we see Morgan Stanley. So they went from overweight at $67 price target, which was not met, to equal weight. And then underweight. So went from very positive to very negative. So these are some of the latest reports that came out. Let's see, maybe a few others. So we see Evercore, Deutsche, and so on. So here's Evercore. Let's take out Morgan Stanley and Citibank. They have a hold which has not been met yet at $32. We'll see if it's met. And so a lot of analysts are not positive about Intel. We'll see why in a minute. But anyway, when you see these price targets lowering more and more, you have to trust less the analyst because a lot of these investment banks also work alongside the company for investment banking services like raising capital, selling bonds, new stocks, and so on. So they're not incentivized to take a very negative position on certain stocks. So let's see some of the fundamentals of Intel. We see how it has performed during this year. We see the market cap still a pretty positive one. Price earning ratio, it's probably, the price target is probably justified given the price target that Intel had during the year. So we see the insider transactions. Some of them looks like some of them have bought some stock, so that's a good thing. Hopefully they can invert the trajectory of Intel. So we see some of the latest reports, and then we see some of the news. Nothing really great came out lately. So let's head to my spreadsheet and let's see some more and some perspective on Intel for the long term. So here's the spreadsheet for Intel. We see the revenue that has gone up quite significantly in the last few years, but not as much as many other tech stocks. So we'll see if they're able to generate more revenue with the businesses that look promising, especially in the area where Intel operates. Not only chips for PCs, electronic devices, and so on, but also for automotive and the automotive industry. Also, we have to consider that there's a good chance that tech stocks like these will operate in the autonomous driving business. So we see the EBITDA, it has grown quite a lot as well, but as I said, not as many other tech stocks in the same field. So that seems manageable. We see the market cap that has grown over the years on average, but not too much. Of course, this year the stock has gone down, not only for the economic situation, but also for the trajectory that the market has taken and the trajectory that was the result of some of these geopolitical turmoil, especially between US and China. So we see the enterprise value, um, and then we see the shares. One positive thing to see is that over the years, Intel has bought back a lot of shares, so they have generated value for investors also by buying back stocks on the market. We can see the earnings per share that have gone up on average pretty well, so that's a positive thing, and also the dividend that has grown over the years. Of course, it's too early to say whether Intel will be able to outperform the market and its competitors in the same field. Now that the competition between the US and China is getting a little bit harsher, there's a good chance that Intel will feel some of the pain because it generates a lot of revenue out of China. So we have to see how that goes, but Intel has to rethink probably its exposure to some markets like China. And now we have seen that Intel wants to um, reinsure some of its production. So that will require quite certainly some investments. So we'll have to see how that will translate in the stock performance. So this is it for today. I hope you enjoyed it. If you did, make sure to like, subscribe, and comment for the next stocks you want me to analyze. And this is it for today. I'm Giacomo. This is Hustle Hub. See you next time.